All right, y'all, back to work. Boy, what a day today. What a wild session it was. It didn't matter whether you were shorting off the top or buying off the bottom. It sounds like everybody made some pretty good money today, so well done on that. Now, we have a lot to talk about now, right? We're post FOMC. Powell didn't surprise anybody, but right now, guys, we have two ranges on the charts right now. One on the higher time frame, one on the lower time frame. If you put those two ranges together, it looks like breakout pullbacks are probably where the money is made tomorrow. In fact, I have three specific types, variations of breakout pullbacks on my radar for Thursday. I want to talk about entry tactics, exit targets. I want to make sure we all have a game plan so we can make some more money, some more moolah on what should be another fun trading session on Thursday, post FOMC Thursday trading session. So charts are ready. Enough of the intro. As always, thank you so much for tuning in and watching my videos here tonight. Let's go make some more green on Thursday morning. S&P SPY is all ready. Nasdaq triple Qs are all ready. I have five. I know, that's a five right there. Five clues on these charts right now that are telling us where the money is probably made for tomorrow. Two of those clues are right here on these hourly time frames. Both the Nasdaq and the S&P are pretty similar right now. Let me dive into the S&P first. This will also apply to the Nasdaq as well. Two clues right now on the hourly time frame. One clue is the overall direction. We know we're bullish overall. There's no doubt about that. The second clue, though, is the more important clue. We have what's called stacked ranges. There's a range right here, and there's a range right here. Now, why is that important? Well, first of all, the most recent range is a magnet, and it likes to rotate back and forth using things like pendulum swings. But the more important range right now is this one right here. The previous range unlocks what is basically a breakout pullback zone. And that is one reason why breakout pullbacks are certainly on my mind for tomorrow. I love the idea of digging deeper into that breakout pullback zone. So let's keep that on our mind for tomorrow. Breakout pullbacks below us are definitely my radar on the S&P, and of course here now too on the Nasdaq. Those are two out of five clues for tomorrow. Let's grab counter now for tomorrow. Tomorrow is a Thursday. There's not really much news tomorrow, but most important thing for tomorrow is you know that tariff headlines are dominating these markets right now. We've heard from the White House supposedly tomorrow some big deal, some big news announcement coming tomorrow. Will it be China? Will it be Middle East? Will it be the big beautiful bill Trump keeps talking about right now? So we know something big is coming. It's definitely something we're watching closely right now, and boy, those headlines have been moving these markets around. So we'll definitely have the news feeds running tomorrow, and we'll see what we get for that big announcement supposedly coming tomorrow. Let's now get back to our charts though, because it's good to know when the news is or lack of news for tomorrow, but the money is made on the charts. Let's now dive down to that faster time frame. I mentioned earlier the higher time frame has those stacked ranges. Well, what do you see right now? Yeah, there's actually three big clues on this tick chart right now. One clue is this huge range right now. Now, what do you notice about this range? There's two things I want you to kind of notice about this range. One of them is rotation. We know ranges love to rotate. That's definitely one of them. But what else do you notice about the range right now? The edges. Look at the edges. Below the edges. The money is made just outside the edges. In fact, if you're not with us in our trade room, we talk about this nonstop. The money is made outside the edges of a trading range. Write that down. That will save you so much pain and suffering and will keep you focused on the best winning trades each day. Now let's combine that with another clue here. There's that breakout pullback zone that was below us on the hourly time frame, right? Love the idea. If we understand that the money is made around the edges, well, obviously that edge right there be a great spot for some bear traps down there. One thing I also want to mention too is that during these wide ranges, and we're overall bullish, we know that as the market rotates off the low, the wider the range is, the stronger that momentum becomes. We're more likely now to punch our way outside of that trading range going higher. One final clue, which might be the most important clue out of all of this, is let's not forget what's overhead. We have a lot of resistance up overhead. Big high, big high, big high. So as we go higher here, We can definitely trade some breakouts. I've got 3 types of breakouts because again, we're overall bullish right now on the higher time frame. But I'm going to warn you right now, those breakouts, we have to be very careful because of all these edges, all these key levels up overhead. So I want to talk about some trades going higher here in a moment. We'll cover that a bit later on the Nasdaq. But first though, let's talk about trading the edges and making money as we go lower, because in all reality, that's probably where the bigger money is made tomorrow. Now, when I say edges, you'll notice right now, there's an edge right there, level right there, level right there, level right here, level right here. In all reality, I can buy off all of these levels. But as you can see though, not all of them are the same. So I want to talk about how, depending on how low we go, that will determine the type of entry tactics that we'll use on this. So for example, let's dive into this because this will be a masterclass on bear traps and trading off the edges. My favorite trade for tomorrow, obviously, is a nice strong run going lower. Get in that breakout pullback zone. Now, you know me, right? Or maybe you don't know me. Maybe you're watching for the first time right now, but I don't use indicators for entries besides the 21 EMA. This yellow line right here is the 21 EMA. I don't use divergence. I don't read order flow. I was never able to get much consistency out of those signals for the entries. What I do is I trade traps. So for example, I'm gonna wait for price to pull back. Is this a good place to sell? Probably not, right? You got big time support, range above us. Yeah, probably not the right place to be selling, but I'll bet a lot of rookies are not going to know that for tomorrow. If I see bears come in and try twice now, remember, always a higher high, now I know where their pain is. Now I know where those sellers are forced to buy their way out. And I can use a very simple, it's basically a bear trap. Now, where does the market want to go right now? It wants to rotate back up to the edges of the other side of that trading range. So now I'm going to add to my winner. Adding to my winning trades completely transformed my trading career a number of years ago. This one easy add-on trade we always look for in our trade room each morning. It looks just like this. It's very simple. It's a shallow pullback. Very important. Shallow pullback. It barely misses that moving average. Higher high in price. I'm going to get in right below that low. It'll be a strong green candle like I teach in our free trading classes. That'll be your add-on. So basically, I'd love to run down, get a bear trap down here, add to my winner, and then let that sucker run. Targets will be other side of that range because we know ranges love to rotate. Now, one small variation of this real quickly here is that sometimes we don't get the bear trap down here, all right? It happens all the time. Sometimes there's so many buyers down here, it just whoop and runs right back up and just smacks back up in that range overhead. If it V bottoms, if I don't get that bear trap down there, I'm gonna watch for this entry. I'll make a small adjustment. V bottoms like this almost always begin to grind going higher. What I'll do is mark a trend line off the high, bring that trend line down off that low. Now pay attention. This is where the magic happens. Look left, find some prior swings. The money is almost always made right below a prior swing. And as we say in our trade room, the first test is the best test off the low of that channel. Makes sense, okay? So again, I want the bear trap down here, but if there's so many buyers, just whoop right back up again, right? I'm going to adjust this now and buy that first test and ride that rotation going back up overhead. Now let's talk about some adjustments here. I want to talk about how do we buy shallow moves here because these will be different entries. Before we talk about those though, let's slow down for a second because I know most folks watching right now, you guys are making money with these. You guys know these patterns already. I get so many great comments, you guys banking profits on these YouTube videos. So I know most folks watching, you guys know this already. But if you're here for the first time right now, this might be a brand new strategy for you. Don't you worry. I teach this entire system in my free trading course. In fact, I have a ton of trade examples, bear traps, add-ons, breakout pullbacks. Guys, I want to help you guys time better entries and make more money with this stuff. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up there. Take that free trading course because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. More importantly though, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, the markets are way too good right now not to be banking consistent profits. So if you're still missing the best entries right now, if you've lost your confidence in your indicators or your current strategy, hit that link that popped up there. What are you waiting for? Grab that link, watch that free trading course. You're going to love all the trade examples I include in that short video series. The best part is it is 100% completely free for you. Also, too, I'm going to put all the important links you'll need to learn this entire system, time better entries, get more consistency, more confidence in your trading. Guys, most folks start making money all from that free video class. So start there first. I'll put all the important links you need in the description of the YouTube video. And don't forget too, if you're on Twitter or X as they call it these days, I post a ton of charts and videos and mindset stuff on X the other day. If you're on that platform, give me a follow. Again, all the details you'll need to learn more and hopefully earn a lot more because of it. I'll put all the details in the description of this YouTube video. Okay, where do we leave off right now? Okay, I want to talk about here what happens if we don't get that run going lower. What if we don't? I want to buy down here. And again, later on, I'm going to talk about us going higher here. So don't you go clicking off. I'll make a lot more value to give you guys here, more money making trades later on in this video. If we go lower here and I don't get to the edge, remember the edges are where the money is made. How would you describe this? I would say I'm buying relatively high. I say that because if you're in my free trading classes right now, I always say this one entry pattern we use whenever we're buying high or selling low. So if all we get is below these swings, I'm gonna make a small adjustment. Now watch closely here. If I go lower, right, big move down, it's 1, 2, and I'm buying into stops. Okay, this is important because in this environment, I can risk small to earn large. Make sense? Okay, now we go halfway there and we bounce up. Now look right here. Can I still get that same risk reward? Please say no. The answer is no, by the way, right? I can't get a good risk reward in that environment. So what do? We make a small adjustment. We call these technical bear traps. Very simple, very important. Pay attention to small details here. Higher high, get underneath this low. This little trick, this little small adjustment, I'll tell you right now, will save you so much pain and suffering on your entries. So we run lower, we bounce back up, right? We're watching off the moving average here. We got bears once, we go up, bears twice. Again, I do not want to buy. I don't want to buy up here. All right, because why? You're buying up towards the highs of that range. What I'm going to do is I want to be getting in under here, right? Because now I get that signal coming in below that low. Again, got to be a higher high. Promise me, got to be a higher high. Higher high under that low. Strong green candle closing firmly above that 21 EMA. As we teach in the free video course, it's a 1-to-1 first target. Stop moves up to point of entry. We take our next target off at the highs. We leave a runner. You'll learn that stuff inside the free video course. So in my trade room, we always say shallow pullback traps. Shallow pullback traps. I hope that makes sense. Okay, that small adjustment, again, am I buying relatively high? Or am I buying around the edges down there? Hope that makes sense. Let me know your thoughts on that in the comments below. Is that something that makes sense to you? Let me know in the comment section below. I would love to hear ways in which I can teach that better because it's a really important thing. I want to make sure I communicate to you guys. Now, one more thing here, okay? If we go higher here, again, I've got 3 types of breakout trades that are going to be a bit more advanced, all right? But it's pretty easy. I'll explain them pretty easily here later on in the video. I want to talk about one more variation. One thing we're seeing a lot of right now is big headlines, right? Big headlines. So I want to remind you that oftentimes if we get a strong move down, I will look for that bear trap down here. 1, 2, trap the bears in and look to add to my winners going higher. Nothing changes. What I want to make you aware of though is every once in a while, when I see a real strong breakout like that range right there, what do ranges do? They break out pullback. So as they run higher, every once in a while, I'm going to get a 1-to-1 first target. I'm going to move that stop up to point of entry, but I don't get that massive run. Because sometimes what happens is the strength of that move is so strong, all that momentum will run that thing back down again. Okay, very important. These are called retest trades. This is where the higher time frame, the hourly chart, really comes in handy, because this is not a reversal. It will feel like a reversal, right? That scared voice in your head will say, whoa, this feels like a reversal. It's not a reversal, right? We need a lot more than just a retest of this low to reverse that big monster 9-day winning streak we've been on the past few weeks on the higher time frame. These retest trades, think of it this way. Anybody who sells here, where's their profit targets? They're buying their way out right here. Is this a good place to sell? The answer is no. The answer is no. Not with that breakout pullback down there. Now, again, I'm telling you right now, this will feel very uncomfortable. But repeat after me. The scary trades are always the biggest winners. The scarier trades are, the bigger the winners are. Trading's uncomfortable. So if you get that knot in your stomach down there, you're probably doing this the right way. So retest trade, do it again. These are oftentimes our biggest winners in our trade room because everybody gets trapped. Everybody gets fooled. And they're thinking now this is a bear market. It's not a bear market. Look higher on the hourly time frame. Squeeze those stops, that bear trap. And then again, as we go higher here, grab that add-on. And whatever you do, please leave this thing to run. Leave a runner. If there's one environment where you must leave a small piece to run, it's always a range market because, again, what do ranges do? They love to rotate, okay? Retest trade. It's a bear trap. Again, will it roll? Good. If it doesn't, rolls over, retest, do it again. And remember too, it could be here. It could be a bit lower too. It doesn't be right on that low. But when it goes back and retest that low here, rookies start piling in, squeeze those stops, and let that sucker run going higher. Okay, that's one of a couple bear traps, or should I say breakout pullbacks on my radar for tomorrow. Now let's dial this up a few more notches as we go higher here. Let's go talk Nasdaq right now. I hear Nasdaq getting grumbly over there right now. It's getting lonely. Let's go grab the Nasdaq here right now. Nasdaq is obviously bullish overall. We know that on the hourly time frame. And as you can see right now, stacked ranges, right? Stacked ranges. Guys, this is something that every trader needs to learn. Whenever we have two ranges, the current range is the magnet. The current range is what rotates. The previous range is begging for, buy me, breakout pullback. Now remember, breakout pullbacks, it could be that level. It could be that level. It could be that level. It could be that level up top of the range here. This whole area now works for a great breakout pullback. And I'm telling you right now, once you learn to combine the current range with the previous range, you'll get yourself some nice monster trades as it rotates off the low of that current range and use the previous range for a breakout pullback. These are some dream scenarios for buyers here. Okay, now, before we dive into the tick charts here, and talk about more entry tactics for tomorrow. If you're enjoying this video right now, please do me a favor. Help me grow this channel tonight, will ya? Hit that like button for me. Make sure you subscribe. I know we're all busy people these days. I really appreciate you guys carving some time out tonight, watching my videos. I put a lot of effort into these videos every evening. So thank you so much for all the support, all the likes, the subs, the shares, all the ongoing support down in the comment section below. Now, I promise I'm done wasting time begging for likes here on YouTube. Let's go roll those sleeves up now and talk about our tick charts. Look at that range right. Look at that range right there, right? It all begins from that little range we saw, 24 hours ago, right? The little range right there. Look at the rotation. Up, down, up, down, up, down, up. Now remember, as these ranges get wider, that's a great example right now. As these ranges get wider, as it gets wider, what happens? Momentum builds. So it's much more difficult because we're overall bullish. This is now more likely. That makes sense, right? As it gets wider, that momentum becomes a steamroller here, and we're more likely now for a nice strong breakout going higher. We get that breakout pullback right below us. Same game plan I mentioned earlier on the S&P, right? Bear traps down here. Shallow, right? Shallow, small adjustment, shallow technical traps. Again, they'll make more sense once you dive into my free video classes. So technical traps right there. Now, let's talk about going higher here. Our biggest concern right now going higher is is we have all these prior highs up here. That high right there, that high right there, right? That high right there. Okay. That causes me now, as we go higher, I don't want, well, here's the thing. There's one giveaway that will tell me I can start buying as we break up. Okay, let's talk about that. So as we go higher here, the 21 EMA becomes your best friend. Okay, the 21 EMA is always your best friend. As you go higher here, I'm going to look for separation off the moving average. Now, separation means the pullbacks, right? The pullbacks are going to be shallow. Look over here. No separation, no separation, no separation, right? Makes sense, right? No separation off moving average right now. So if we start pumping higher here, again, a lot of overnight headlines right now. We're rotating off that low, lots of bullish momentum. If we start pumping higher here right now, and we start seeing this separate off that moving average. Now, I always go half size on these because you're buying relatively high. Good momentum, but again, location, not so great. Half size trade, quarter size trade. This is that same add-on trade I mentioned earlier. Higher high in price. Again, the most important thing here is separation. Higher high in price, separates off the moving average, and running higher from there. Now, we know that breakouts, okay? Breakout leg is a measuring leg. Breakout leg is a measuring leg. That will tell us where the entry is and where the exit is. Now, at this point right now, we're way high up around big time levels of resistance up overhead. What do ranges like to do? They love to break out pullback. So think about now this kind of range area right there, right? Now it's all about breakout pullbacks. The biggest challenge for us going higher tomorrow will be we're going to have to get a little bit aggressive on the initial entries if you want to. You can always skip this entry, by the way. I always tell my students in the trade room, there's no gun to my head right there. That's the most aggressive entry by far. And again, we'll go half size, quarter size, maybe a third of your normal position size. But the best trade though now is now we use that range. We don't want to buy into those highs up there. And we now look for a breakout pullback. Now, I know most folks watching, you guys know this one already, but if you don't know it already, a classic breakout pullback is a two-legged pullback. Now, there's two things you want to think about. One, think about a measured move, A, B, C, D. A measured move, A, B, C, D, a 100% extension. Between you, me, and YouTube, the best ones are a bit more than 100%. That's one thing about it. Second thing is look at these prior highs over here. That prior high, any of these prior highs can be used as a great area for a breakout pullback. That's going to give us our level. Now, as always, I'm not going to waste your time and my time by talking about divergence or reading tape here or all those other indicators. Trap the bears in, get those bears trying twice, squeeze those stops running higher. We know now where's the market want to go. It wants to take out that high, that recent high up there. My job now is to grab the bear trap, buy right into stops, and then as we go higher here, I want to start adding to my winner. Now, the hardest part about the add-on trade in this example is I need that add-on trade. I want that add-on trade, very important. I want that add-on trade to get me in before we take out that high, all right? I want it down here, not way up there, all right? Gotta time those the right way, all right? So breakout pullback, a classic breakout pullback. Another breakout pattern I'm watching for tomorrow, we may pop up and begin to grind. These can be a bit tricky because that voice in your head is going to make it sound like you're missing this trade. You're not though. Again, all of this resistance up overhead. What I'll do is, watch this, mark a trend line off the highs, bring that trend line down around that low. I'll tell you, these are really easy. There's no guarantees in trading, but these pop and grinds, we call these pop and grinds in our video classes. When it pops up and grinds like that, these pop and grinds they're about as close to a guaranteed winner as you're gonna get. If we're lucky on this, we'll try to combine one of those prior highs over there along with one of these swings, right? That is always where kind of the money is right there. Now, unfortunately, I can't teach all the entry tactics in this video right now. That's why I have that free video course for you to learn these tactics. But oftentimes, though, what happens is we go up, We pull back, we get below the 21 EMA, the bears will come in thinking this move is a reversal. It's probably not when it grinds up like that. Grinding markets are very difficult to stop. Momentum's very, very strong in those scenarios. So trap the bears in once, twice, get those stops squeezed and right, whoop up, there we go. Targets come off at the high, and again, we'll leave a runner, always leave a little piece of a runner, especially in a situation like that. That's one, we call this pop and grind channels. It's a breakout pullback. Again, think about using those prior highs over there. And one final thing I want to talk about here is, and this one is always one of our favorites, what if we popped up overnight, and as everyone's waiting for that big headline, that big beautiful bill Trump keeps on talking about right now, what if we went higher into a range up here? What would that tell us? What would that be? These stacked ranges, right? Stacked ranges. That range right there is the breakout pullback, and the most recent range is the magnet, right? These are really easy once you learn to recognize these stacked ranges. So if we do pop up and go sideways here, all we do now is wait for a pullback, get into some support level here down below us, right? Could be any of these prior highs here, some support level, and then use that 21 EMA. This is why I only use one moving average, right? Because you put too many moving averages on here, it just messes things up. I want to have one EMA, make it really easy. I'm looking at that indicator. That's the only one. Master it, right? Okay, bear trap off of that low. And again, as we roll higher, I'm adding to my winner as always, right? Always in range rotations, we add to our winner. The best part about these is the amount below, the amount above. One of my favorite parts about ranges is that you know where it's going. You know where it wants to go, right? The other side of that range. I got a lot of emails and comments recently, folks who are making money with these range plays we talk about here on these YouTube videos. So same idea, we pop up. Again, combine some prior highs there. Use that as a support level. And again, it could be here, it could be here, it could be all the way down in that area. Remember though, that new range is the magnet. Don't lose sight of that key fact. That new range is the magnet. And one more thing too, by the way, okay, this happens a lot too. If we go into a range up here, remember that knife cuts both ways. Oftentimes we'll pop up and then jam back lower like this. Remember, we now know the amount above, the amount below. Look over here, right? The amount above, the amount below, right? That tells you exactly where to be entering now. As always now, don't confuse this. It's not a reversal. It's a pullback. It's a range rotation is what it is. Again, once you learn this stuff, it will completely change the way you look at everything, right? It happens to every market, every liquid market. Trap the bears in once, twice, squeeze those stops and leave that runner. Remember, trade the edges, right? Trade the edges of that range. All right, guys, boy, I'm getting goosebumps just talking this stuff through with you guys tonight. Hope you guys enjoy the video. That is the game plan for tomorrow. Now, speaking of tomorrow, the best place to do this with us is in our trade room, 8 o'clock Eastern time. Guys, I can't think of any better way to learn to trade than to do it with me every morning in our trade room, 8 o'clock Eastern time. Again, start first with the free video course. I'll put all the links you guys need in the description of the video. Enjoy that video class. You'll love all those trade examples, but promise me, come join me soon in the morning trade room, 8 o'clock Eastern time, and we'll do it together. Right, guys? In the meantime, hope you learned a bunch tonight. Hope you use this knowledge to earn a bunch tomorrow. And be well, be nice to each other out there, and be here next time. Adios, amigos. Bye for now.